It's 10 a.m. on Tuesday, December 15th, 2020, and this is 10 on Tuesdays. I brought back Craig Johnson, Executive Director of the Streamlined Sales Tax Governing Board. He's going to talk a little more about multi-state tax. We can't talk enough about that topic. Craig was on 10 on Tuesdays on June 30th. If you missed that episode, make sure to go to YouTube, 10 on Tuesdays channel, and check it out. I'm Holly Hoffman, owner of the Sales and Income Tax Advisory Network. Prior to creating my company, I worked for the Wisconsin Department of Revenue as an auditor, speaker, and sales tax specialist. My passion is to help provide sales tax education and support to tax professionals, businesses, and associations with the goal of building a network of empowered taxpayers. For more information, visit salesandincometax.com. That's my website, and we just launched my revised version. I know Craig was trying to get into my website this weekend and he's like, what's going on? It says it's hacked or whatever, but yep, we updated my website. So I know we got some tweaking to do, but check out the new website, the new information, the focus on contractors. It's a good website. Thank you for joining us today. This is the last episode of 2020. To rewatch previous episodes, go to my website, salesandincometax.com, and you can look for 10 on Tuesdays under events. Tracy of TLC Digital Media is getting all my videos from this year uploaded there. You can also find previous episodes on YouTube on the 10 on Tuesdays YouTube channel. So I can't waste another second because Craig has a lot to share. Before bringing on Craig Johnson, Craig, welcome and thank you for coming back on to talk to us.
Hey, thanks, Holly, for inviting me to participate in your program again and, share some more information about what Streamline's been working on and our efforts, as we continue to, as we say, simplify and modernize sales and use taxes throughout the country. We have the program that we've put together and the work that we do with the business community and our certified service providers. I think that we really developed a system that makes sales tax compliance much easier for businesses and really more cost effective for remote sellers. So I look forward to sharing some of that information today.
Awesome. And I know that's what I asked you to talk about. We kind of discussed yesterday a myriad of things we could discuss, but I asked for an update, and this is kind of a follow-up. So I know you're going to refresh on what you talked about last time and then give us an update on CSPs and then an update on Wayfair and remote sellers. And then I know you're going to talk about a project you're working on, which I'm very excited. So, and I know Streamlined Sales Tax, you have an impossible job, but you guys are doing a great job. I don't think people realize how difficult of a job you have, but you guys are doing a lot of hard work and doing a lot of good things, not only for states, but for businesses to be able to comply with all these rules. And I'm going to turn over the presentation to you so you can control the slides. So you should be good to go. And I will step in.
Okay, well, let's move forward then. And, as you know, Holly, I could talk about Streamline for hours. In fact, I do it every day with different folks. But with the limited time we have today, as you indicated, we're gonna try to focus on 3 or 4 topics. We'll talk about our certified service providers and our contract with them and the recertification process. We'll talk about some of the impacts of the Wayfair decision. That is a huge decision that people really need to understand, and what the state expectations are, what Streamline's been doing, and what we've been seeing in that area. And then our disclosed practice project that we've been working on with respect to remote sellers and marketplace facilitators, and talk a little bit about what we're doing in that area, and then just make people aware of a few of the other resources that we have available from a Streamline perspective. So let me see if I can advance this slide here. You may have to move it forward for me, Holly. There we go. Now there it is. So this is just a quick map of the states, of our member states. The ones that are in the bluish color, turquoise color, those are all of our member states. The one state that's white, Colorado, is a state that has never participated in Streamline or with Streamline. All of the rest of the states that are out there have participated with us in some way, shape, or form as advisory states. So I'll try this. And it looks like, okay, now I'm able to move forward. And I know many of you have, and we talked in depth the last time I was on about on your program about the history of Streamline and the key features of the agreement. So obviously, for those that are not familiar with us, I'd encourage you to go back really and listen to that, as Holly mentioned. But I think it's important whenever I talk about Streamline, I need to remind people about kind of the principles and goals that Streamline was founded on, and we continue to operate under. And those are the goals that you can see on your screen. The simpler system, we want something to make it as simple as possible. If we can't make it simple, make it uniform. If we can't make it, make it simple and make it uniform, we also have to keep in mind state sovereignty and trying to find that right balance between simplification and uniformity and state sovereignty. It's difficult, but I think, Streamline really has done a great job in that area. Everybody doesn't get everything that they want when we do this, but for the most part, we ended up with a product that was workable and it was really politically acceptable. And then obviously using technology to help ease the retailer's tax collection and reporting burdens and requirements. And that's using our rate and boundary database and our taxability matrices and things such as that. So let me advance here. I guess, Holly, they don't show up. There they are. See if we can get this to move forward. There we go. So let's talk about that first discussion, that you mentioned that you wanted me to touch on was, kind of our certified service providers. And I know you had Scott Peterson and Chad Paulson from Avalara on your program previously. And they provided an in-depth discussion of CSPs. But the CSP program that Streamline developed is probably one of the best things that we've done as far as specifically helping businesses comply with their overall sales tax calculation, collection, and remittance process. And particularly in helping remove many of the burdens that are faced by remote sellers. Now, just a quick background or a quick definition of, what is a third party or what is a CSP? And I tell businesses really to think of CSPs as a way to outsource the majority of their sales tax, calculation, your collection, your reporting, and your auditing responsibilities as well. Businesses have been doing this for years. With respect to payroll processing, now they have an option to do it with their sales tax obligations as well. And I talked about for years with respect to their payroll tax obligations. It's been years now that they've also been able to do this with respect to their sales tax obligations. We've had certified service providers around since 2006, 2007 was the first contracts that we had entered into with them. And we've developed a contract under which we partner with private companies that have developed these sales tax software programs that they can integrate into, a seller's order entry and a seller's accounting system. When we talk about these order entry systems or the tax engines, we refer to them as certified automated systems. And before a company ever can become a CSP, and before we're willing to enter into a contract with them, every one of our member states had to test their tax engine or test their system and agree that it accurately determines the tax treatment of transactions. It includes determining if a product is subject to tax, what the state and local tax rates are, and how much tax is due to each jurisdiction. They also have to be able to show with test data that all of our states provide to them that they can accurately prepare and file, the simplified electronic return with each one of our states, and then be able to transmit the required payments to them. There are various other requirements that they have to meet, and those are really laid out in the contract that we enter into with them, as well as in the Streamlined Sales Tax Agreement. But once all their requirements are met, their system's certified, and at that point, we can enter into a contract with them. Now, when a seller uses a CSP, there are various benefits those sellers receive. One of the biggest benefits from my perspective is that the CSP is really assuming the responsibility for the proper calculation of the sales tax and making sure that they prepare and file those required returns correctly and file them on time. And all of that gets provided at no cost to the sellers in the SST states. If they register through Streamline, and if they only have to collect because they meet or they exceed the state's economic nexus threshold. In addition, under the CSP contract and SST requirements, CSP also is assuming responsibility for any audits that are conducted in a member state and in which the seller is a volunteer. Now, obviously, if the seller doesn't provide the CSP with all the information needed, or if they give them false information, in those cases, obviously the seller can be held liable for those types of things. Now, we have contracts in place right now with all of our CSPs, with all 7 of our CSP systems that have been certified, that run through December 31st of this year. Our states have been, and they continue to test these systems on a quarterly basis to make sure they're still functioning properly and checking for any errors that they can find, and they need to get them corrected. We just don't want a CSP system to be out there operating improperly, not collecting the proper tax when both the seller thought they were collecting it properly, the seller's customer thought that they were collecting it properly as well. So about a year before our contract with the CSPs is up, we actually have what we call an audit core team. They go out and they conduct a full contract compliance audit of the CSP system. We look at the system, we look at the way it's integrated, we look at what it's done, we compare everything that they've done with the terms of our contract and make sure that they are following all the terms of the contract. This team puts together a report. We review it with the CSP. We talk to our certification committee. We talk about it and review it with our executive committee, because they ultimately are the ones that will determine whether or not a CSP gets recertified. If their system is not up to snuff, if it's not doing everything that it's supposed to be doing and everything that's required under the contract, then we don't have to recertify them, and we may not enter into another contract with them. But we got all those contract compliance audits done. But at the same time, while that's going on, especially after the Wayfair decision was decided, we've got another group that's running parallel to them that's been working on and reviewing the terms of our existing CSP contract and renegotiating what the terms of that contract might be for the upcoming 3-year period. Now, we were able to complete the contract negotiations themselves in August, and that was after, I will tell you, it was after about a good 18-month period, close to 2-year period of time of renegotiating it, and then also getting those contract compliance audits completed in the October-November timeframe. And I'm pleased to report that we were able to get the new contract in place with all of our existing CSPs. Now we're still finalizing, obviously, the signature process, because we're located throughout the country, and doing everything remotely is not always easy to get everybody's signatures on in the right order and things like that. But we're getting that all, so they should all be signed, sealed, and delivered, and for the most part they are. But for the rest of them that we're still working through getting the signatures on, that will all be done. So we know that. And sellers now know that states have committed through this contract process to continue to offer CSP services. And I would encourage anybody listening that hasn't looked into the possibility of using a CSP to do so. Take a look at the information on our site and reach out to a couple of them to find out what they can do to you or do for you. And again, Holly, I know you had Scott and Chad on from Avalara, and I think that was a good conversation you had there as well.
Right. And again, CSPs, if it's for the streamlined states and you don't have physical presence in the state and just economic nexus, then the CSP would file for you for free. And that is just 24 states now?
Yep.
Well, 23 for a Wisconsin state.
Yep, it's 23, actually all 24 of our member states. Any of the states where you would have a physical presence, the states are not going to be covering the cost for that. But instead, if you want to use a CSP, you would actually be the one that would would be required to make those types of payments and hire them for that. The CSPs also do things beyond the work for us. So there are other things that those CSPs offer that sellers can contract with them on as well.
Right. It's a big help. It's a big help. People need to at least look into it and find out if that's something that would benefit them.
Yeah, and when the Wayfair decision, that's what we're moving on to, when the Wayfair decision was decided, we had put together an amicus brief to talk about what our states have done with respect to developing the CSP contracts and offering of the CSP services, and obviously included a lot of that information in the amicus brief, and a lot of that was referred to in the Wayfair decision then when the U.S. Supreme Court looked at it as well. So they're a great opportunity for people. I would certainly, again, encourage people to look into using them if they haven't done so in the past. So let's move on to talk a little bit about the Wayfair decision itself and what's happened. I'm sure many of you have heard about it over and over, and we'll talk about kind of what our state expectations were and really kind of the results that Streamline has seen. And the June 21st, 2018 date. I mean, that's a date. For those of us in the sales tax world, Holly, I'm sure you'll probably remember that date for the rest of your life as well.
Yes.
And it's probably one of the biggest decisions that are ever going to take place in our lifetime related to sales and use tax have happened. And it's a huge decision in the fact that it literally can affect every seller that makes any type of a sale online, remotely, whatever it may be, to any sort of volume. It could potentially impact them. And so people really need to be aware of it. And they need to understand too that this new line of thinking, we'll call it, under the Wayfair decision, it really overturned roughly 50 years of people only having to think about physical presence. It didn't replace it. And I think that's an important thing for people to understand. If you got physical presence, you still have to collect. Doesn't matter what your levels of presence are in most of the states. But now it's not only physical presence you have to worry about, you have to also worry about, excuse me, where you have economic presence, or as the court said, economic and virtual presence. And with the Wayfair decision, that's a whole new concept as far as sales tax collection responsibilities are that have to be understood. I mean, you have control as a business where your physical presence is, but you have a lot less control where you have economic nexus or where you have economic presence if you want to grow your business in any way, shape, or form. So in the 2+ years since the decision, I mean, this is how important this was to states. Things don't usually happen really fast at a state, but in about the 2+ years since the decision, 43 of the 45 states that have a sales tax have already enacted economic nexus thresholds. Their legislature's already enacted to take care of that. The two that aren't, Florida and Missouri, I do expect that they will probably do something in the not too distant future. So let's talk about, if we can, the expectations after Wayfair. What do the states expect sellers to do? I think states have done a good job in implementing the Wayfair decision. They've tried to get the word out. They've really done what I would call a soft implementation. They've reached out to businesses. They've reached out to associations. They've tried to work with sellers that have reached out to them. But one of the challenges that's faced by the states is identifying remote sellers. We've got folks like you, Holly, that have clients, and we really rely on people like you to remind these clients, hey, even though you're in Wisconsin, if that's where you're located, and you're making sales in other states, you're shipping your product to other states, you might have a collection responsibility there.
Right.
And the states don't know who all of these other businesses are. Wisconsin doesn't know who all the businesses are that are shipping their products into Wisconsin.
Right.
And that's part of the difficulty for the states in getting the information out. We put together some articles. I saw Iowa just put out a an article and some guidance related to marketplace sellers and remote sellers, and reminded them that, hey, if you're in Iowa and you're already registered for us, don't forget, if you're shipping your products to other states, you might have a collection and response and reporting responsibility to those other states. But
right.
you know, again,
And as we talk about that, and we talk about how the states have a hard time identifying people and businesses that are doing interstate business, it's also you're putting yourself at risk if you think they won't find you, because if someone you deal with gets audited, your information is now coming to light, being reviewed, invoices being reviewed, and if you weren't charging tax, it's going to get questioned, and then they can look you up. So it's just time consuming for them to find you, but once they find you, then suddenly you're going to be in trouble, and then it might be a series of audits from different states, right, Craig?
Yeah, that's exactly right. I mean, you know, states have exchange agreements. Holly, you know this from when you worked with the Department of Revenue, I'm sure.
Mm-hmm.
You know, Wisconsin could go in and conduct an audit of a business, and they may find that they're making sales into these other states, and the seller is telling Wisconsin, well, that's not taxable to Wisconsin because, you know, we ship that to Minnesota. Well, if you haven't collected Minnesota tax, obviously the states want to be working together. They're helping each other out to try to encourage sellers to be collecting and remitting the tax where they need to be collecting and remitting. And they're going to exchange some of that information. You know, I don't think that there's been any that's been done to any great extent at this point in time, but I do see that as, you know, as going forward. And, you know, as we get further and further away from the Wayfair decision, so further and further away from that June 21st, 2018 date, I think the states are going to, you know, they're going to start some type of enforcement programs. I mean, they're going to need to, just like they do with the regular audit program, right? They're going to want to be identifying and getting these sellers on board and collecting and remitting the tax that's legally due and owing. And I think the important thing for sellers to really remember, you know, if they're trying to stay under the radar, so to speak, you know, is that and Holly, you touched on it, when or if that state discovers them, since they have not been collecting and remitting or filing their returns, there likely is either no statute of limitations, so states can go back to when the Wayfair decision was, to June 21st, 2018,
Mm-hmm.
or some sort of extended period, but they can go back, and then the sellers could be responsible for those back taxes. And that really is the scenario that, from my perspective, I really want to help sellers avoid. It does no good it does nobody any good. It doesn't do the state where the seller is located, or the state where the seller is not located and should be collecting the tax, or the purchaser. It doesn't do any of them any good for sellers not to be collecting the tax that's legally due and owing at the time of the sale. And Holly, you and I have talked in the past about, you know, if a seller doesn't collect and remit in states where they're making remote sales, and all of a sudden a number of states, I'm going to say, discover them or find them, and they reach out to that seller and say, hey, you should have been collecting all this tax, and by the way, here's the bill for that tax. And if it gets to be too much of a load, we'll say, you know, that business may look at it and say, I can't afford to pay it. And then the state where the business is located, if that business ends up saying, we're going to have to close the doors, the state where their business is located just lost the seller, plus all the states where that seller was a remote seller no longer has them shipping their product in and collecting the tax. So it becomes an issue where that seller goes away, that revenue source goes away for all the states. And the worst part about it, from my perspective, is if sellers haven't been collecting, this is tax that doesn't have to come out of your own pocket. This is tax that you can collect from your customers as you make your sales.
Right. And we were talking about, and that's the reason, you know, everyone wants to keep their customers healthy and successful, and states, you know, their customers really are the taxpayers, so they want to keep them healthy and successful. So making sure that they're paying or collecting that tax really from their customers instead of paying out of pocket during an audit, that's the goal.
Exactly. And so I would again encourage sellers, if you have and are making remote sales into other states, check out that state's laws and find out, and that state's requirements, find out whether or not you should be collecting or remitting. And what we've seen at Streamline is, since the Wayfair decision, we've seen the number of active sellers registered through us more than triple. We went from about 3,900 to we're about 12,700, and we're adding anywhere from 200 to 400 or 500 new sellers a month. That's what our net increase is. And it's more of its sellers are becoming more and more aware of their collection and remittance requirements. The other thing that we're seeing, and something that I want to continue to see grow, is the percentage of the sellers using CSPs. I want to see it grow for a number of reasons. Obviously, I want our CSP program to be successful, but states, by having more sellers use CSPs, states can be more confident that the tax that's being collected and remitted is correct. The taxability was right, the state and local rates were right. That ultimately can lead to a reduction in the state's need to go out and conduct audits. If we continue to test these CSP systems, make sure that they're accurate, and more sellers use them, states can be, again, confident of the tax that they're getting. They don't have to worry about a huge refund claim because someone overcollected. They don't have to worry about a huge underpayment because someone undercollected, if they're using that certified system. And I can tell you that we have seen, and our member states have seen, significant increases in state collections from Streamline registered sellers since the Wayfair decision. Doubling and tripling of the dollars that are being collected is not unusual for our member states. That, coupled with marketplace facilitators collecting and remitting now in most of the states, that has really helped as far as the collections are concerned.
And I know it seems like we're, I feel like we're promoting pay tax, send more tax to the state governments, but what this really means, and all the presentations that I do, we talk about the importance of use tax and whatnot, and this avoids the need of having use tax because sellers are being required to collect sales tax. And what it does is it levels the playing field. If you're a Wisconsin business and other states are selling similar products or services as you into Wisconsin, now they are required to charge sales tax just like you're required to charge sales tax. So it levels the playing field. So I don't want to understate the importance of what this means to Wisconsin businesses.
Right. Yeah, so again, the time goes by so quick when we're doing this, Holly, but
I know.
I want to talk about this disclosed practices project that we're working on for remote sellers, marketplace sellers, and marketplace facilitators. And when we talk about disclosed practices, these are things that the business community has said, look, we need states to tell us what their position is on these various topics or these various issues. We're not requiring states. Streamline doesn't require states to do things in a certain way with respect to these disclosed practices, but it's important that they tell the businesses this is what our position is on the various issue. And we've adopted several of them previously as far as the disclosed practices are, and to find them on in the Streamlined Sales Tax Agreement, they're in Appendix E, and they also are on our website in the taxability matrix that each state fills out. That's where you can find their answers to it. And what I've done here is just thrown a couple of screenshots from our website. The first one up in the upper left-hand corner is our homepage. And on any one of our pages, if you scroll all the way to the bottom, you can't see it on here, but if you scroll all the way down, you can get into the Streamline. There's a link to the Streamlined Sales Tax Agreement. Within the agreement, there's a hyperlink to Appendix E, which is the screen this over on the right-hand side here, this Appendix E. That is actually where we provide a lot of the detail and the explanations related to our disclosed practices. And there's 7 of them now. We're working on the 8th one now, which is for the marketplace facilitators. So that's where the background and the wording is. Now, on the website, under the For Businesses tab, there's a section that will get you down to the taxability matrix. And the taxability matrix is really where the states provide their answers. And when you click on the taxability matrix, this link over here, you will see this screen come up that's over on the right-hand side. So that's what you're going to see, just to make you visually aware of what you're going to see if you go in and try to find these. Once you get into the taxability matrix, each state is listed out. You select the state you want. I just picked Arkansas. They get picked on all the time by me just because obviously they're the first one listed with yay. And you scroll down through this taxability matrix and you get into section 2, which is the tax administration practices. Those are our disclosed practices. And we have them listed. It's 1 through 7 right now. We are working on number 8. And what I've just kind of overlaid here is disclosed practice 8, or the start of it, just one snippet. That disclosed practice, I will tell you, is about, I think it's 12 to 14 pages long of different questions states need to answer and provide responses to. But it's information that the business community has said, we need the states to answer these questions for us if we're going to be able to accurately calculate, collect, and remit the tax. So the project that we're working on is the one related to remote sellers, marketplace facilitators, and marketplace sellers. And when we get into the specific section of disclosed practice 8 related to remote sellers, we're having each of the states identify, who is a remote seller. Do you know if you're a remote seller in every state? Or each state may have a little bit different definition. We'll talk about, and each state has to explain what their threshold is. Many of you may be familiar in the words $100,000 in sales or 200 transactions. You recognize that. I mean, to me, that's almost becoming language that automatically means an economic nexus threshold. But different states have different thresholds. And not only do they have different thresholds, they also calculate those thresholds using different bases. So for example, some states base their 200 transactions, $100,000, they base it on their gross sales. Other states will base it only on retail sales. And still other states only look at taxable sales. So you have to know and understand in each of the states where you're making remote sales, how that state calculates it. Because if you're only looking at your taxable sales and that state uses gross, you may have been one of those that should have been registered and wasn't. So those are things, though, that we need to, little nuances that we really need to make sure that the states explain how their threshold works. The calculations themselves, what time period do you consider? Most states look at either the current and or previous calendar year. Some states look at a rolling 12-month period. You need to know what that period is. So those are things that we're making the states disclose for remote sellers in this practice. When do you need to register? So if you hit a state's threshold in Wisconsin, I want you to ask yourself, if I hit the threshold today, I hit either 200 transactions or 100,000 in sales, when do I have to start registering? Do I start registering January 1st of next year? Do I start registering tomorrow because I reached the threshold today? Or do I have to look back for the entire calendar year? Thankfully, I'm not aware of any of our member states that make you look back. But most states or some states want you to start collecting on the next transaction. So those are things you have to be keeping track of throughout the year and know when you need to register. Our recommendation and my recommendation to states when they talk to me about when they should require remote sellers to collect is I tell them you need to give sellers time to get their system set up and put in place. And so I suggest giving them 30 or 60 days, first day of a calendar month, either 30 or 60 days after they hit that threshold. But different states do different things. And when you talk about remote sellers, you also have to think about, inventory in third-party warehouses. And I'm gonna say something, and some of you may be going, "Oh, I don't even want to hear about it." Amazon Marketplace, for sale by Amazon, FBA Amazon sellers. You've got your inventory that you own, but they've put it all over in different states. Do you now have physical presence in those states, or do those states say, hey, if it's in that third-party warehouse, you're okay? Different states do different things in that area. You need to know and understand what all those differences are. And once those disclosed practices are out there, sellers are going to know what those answers are. We also look at with marketplace sellers in there and whether or not sales through marketplaces, are they included in determining whether or not a seller meets an economic nexus threshold? So if you make some sales on your own and you sell through a marketplace, when you're determining that $100,000 threshold, for example, do you include both? Do you include only your direct sales? Different sales or different states do different things. What if you only sell through marketplaces? Do you even have a collection and reporting requirement? Do you even have to register? Some states are going to say yes. Other states are going to say no. But again, if you don't register and you should have, all of a sudden you become a non-filer, and that can create some issues for you. For those of you selling on marketplaces and those of you making your own sales, if you make an exempt sale, you need some sort of documentation, right? You need an exemption certificate. Well, if it's sold on a marketplace, do you have to maintain that certificate because you actually ship the product to the customer, or does the marketplace have to maintain it? And what happens if they don't collect and remit it properly? What's your responsibility? What liability do you potentially have? So those are questions that businesses have said, hey, we need answers to these. We need to at least know what the state's positions are. Once we have that all put together, and again, you'll have to click on each state individually for them to see each state's answers. But I've already talked with my staff about it, and I think that what we're going to be doing is we're going to be then compiling this into, and I'll call it one spreadsheet for lack of a better term, but a place where we have consolidated all that information. So you can look at the question and see what all the state's answers are going across. We know it's going to be a big task to keep that up to date and things like that, but that's one of the things that I believe that we have to do if we're going to make this easier for remote sellers and marketplace sellers. And I know we're already 5 minutes over, Holly, and we haven't really touched on the facilitators, but I would just encourage people, if you're a marketplace seller, if you're a remote seller, if you're a marketplace facilitator, take a look at these disclosed practices. Now, we are still developing them. We are still finalizing them with the business community. We'll be discussing them. We have a governing board meeting coming up this Friday. We'll be discussing this whole issue of these disclosed practices. And we anticipate, as soon as we have them available, we're going to try to get our states to start answering them and put the information out there. But we expect our governing board, because these do require formal governing board approval, that the business community and the state should be able to come to consensus on what's included in there. And we expect that we will be voting on these officially in May to make sure that every state then has to have their taxability matrix and certificate of compliance updated with us by the time their annual recertification documents are due, which they're due August 1st of every year. So we're going to continue to be moving forward on this. Again, encourage you to really be thinking about what transactions are taking place that you're involved with that are outside the state, and what responsibility you may have, whether you know it or not, or whether you like it or not at this point. I just feel it's really important for people to understand where their potential liabilities are. And I know, Holly, you feel strongly about that too.
Right. And this is something that I put together for a couple of my clients, charts that they can follow, because just understanding that the 100,000 threshold or the 200 transactions isn't sufficient. They really need to look at the calculation, the period, all that stuff. And it's overwhelming unless you identify the states that are getting close, and then you have your chart and you can follow across. So this is how it's calculated. So then individually per state, so it narrows it down a bit. So it seems overwhelming. You need to put out there everything for all the states, but businesses can narrow it down to which states are they getting close to the threshold. Okay, what are the specific calculations and requirements? And it's a little less daunting. And then this will help them because they'll know exactly what the responsibility is, and they can prepare when they need to be registered and all that.
Right. Yeah, and this is a chart that we put out there. We put this out for remote sellers, and this gives some very basic information, but all of these things under the state guidance and under the notes and under the revenue department's websites, those are all hyperlinks directly to the state. So if you want more information about a particular state, it's certainly a place to go. And when I got there, I jumped through a few slides, but I'll just jump back here. I just want you to see this where we get this. If you're off on anytime you're on our homepage, and you get this drop-down menu for businesses, you can go down to any one of these topics, obviously, to get the information, and that's the best way and the easiest way to find the information you're looking for. And if you click on remote sellers, for example, on that drop-down menu, this is the first page it's going to take you to. Then you can also from here get to whether it's if you're a remote seller, you want to see it from a marketplace seller perspective or a marketplace facilitator perspective. These are links that will take you to the various charts that we put together to this point. And we try to include all the states. If even non-member states are willing to provide us the information, we're more than happy to include it, because again, our philosophy is that if we can put all that information in one spot for you, and we can link you to those other states, the other locations, we want to do that to make it as easy as possible for you to be able to get the information you need.
That's awesome. I know it's a lot, and it's a lot for people to digest. It's like I said, you just need to figure out what areas you're concerned about and narrow it down. But this gives you the information for those states, so you can identify when you narrow it down to those states. And I just want to also state, I know we're over time, but we talk about the marketplace facilitator, and we always mention online. But in many of these states, including Wisconsin, the marketplace facilitator applies to more than just online sellers. And it includes things like Uber Eats and consignment shops. It's not just online, and it's not necessarily interstate. It can be within your state. So anytime someone else is advertising your product and processing payment, that's marketplace facilitator generally.
Yeah, and I think something else people just need to be aware of, and I think you're going to see some activity in some of the states on this, or at least some discussions, is, we're talking sales and use tax, but if you sell a product that's subject to some other type of a tax, and if it's being sold, let's say, through a marketplace or on a marketplace facilitator's site, or in the other ways that Holly just described, and there's other taxes due, the question becomes, who's responsible for those other taxes? If you sell a product, for example, that's subject to an alcohol tax, who has to collect and report that? Or who's responsible for reporting those transactions? And in different states, I think you're going to see different answers. It's not something that we have delved into at Streamline, but it's a question that we are asking in our disclosed practices. So something else for you to think about, because sales tax just isn't enough, right?
Mm-hmm. I mean, we laugh, but it's complex.
Right. So Holly, I guess if people have questions or comments or suggestions on things that they think Streamline should be doing in particular, topics that they think would be helpful to them, I would certainly encourage them to reach out to me. If you've got some other ideas for simplification and uniformity, we have state legislators involved with us. We have the tax administrators, and most importantly, I always say, we have the business community. And the business community is the one facing these issues on a day-to-day basis, and we want to try to do everything we can to help them. But we also have to recognize, I'm going to say, political realities as we look for things that, are they requirements that states need to do, or are they really disclosed practices that we just need to tell people, here's what we're doing, even though we may not be uniform.
Yeah, right. Yeah, it's a lot of players you're working with to try to bring them together and coordinate. So that's why I said you have a tough job. But yes, I encourage people to reach out to you and be a part of the solution and help get their questions answered and make sure that they're covered, and their questions and their suggestions will help others. So. All right, I want to thank you, Craig. I have one question for you, but I think I'm going to close the presentation, and people can hang on afterwards if they would like. I want to say Merry Christmas and Happy New Year to everyone. This is the last episode of 2020. In 2021, we're moving to podcast, which will be so much nicer. And you can tune in anytime you want. And you can follow Sales and Income Tax on Facebook, LinkedIn, and Twitter for upcoming guests and interviews and when podcasts are going to be published. And you can also visit my website, salesandIncomeTax.com. And so thank you for joining us. Thank you, Craig, for being on here. And then if people need to check off, they can. I do have one question. Hello to Daryl out there. Daryl has a question for you. If you can explain an interpretation request process.
Sure. So we have what we call a compliance review and interpretations committee. And if sellers or businesses are looking for interpretations of the agreement itself, we have a form online that's available. You fill out, you complete, you send it in to me, and you lay out what your issue is. You lay out what the facts are, what the rules are, or what the information you've got as far as what research you have done. We also want people to tell us what their proposed outcome is as well. When that happens, we will then take our CRIC committee, Compliance Review Interpretations Committee. We'll sit down. I'll review the documents first, see if it's complete, turn it over to CRIC. CRIC will have a meeting to discuss it and decide whether or not they're willing to accept that interpretation request. And when we say accept the request, we mean they're willing to discuss the issue and develop an interpretation or a ruling. It may be consistent with what the requester has proposed. It may be different. And once CRIC develops its recommendation or its proposed ruling, that proposed ruling goes to the governing board as a whole. And the governing board as a whole will then, and it'll be obviously in public meetings. We are very transparent. The CRIC meetings are public, as are our governing board meetings. And the governing board will review it. They will discuss the interpretation request. They will take any comments, any public comments from whether it's the business community, whether it's states, and then they will decide either they accept or reject CRIC's recommendation. And if they accept the CRIC recommendation, it's important to understand that, okay, the governing board is saying the recommendation that it would be consistent with what's required under the agreement. States would be expected to follow that if they're going to be in compliance with the agreement. It is important to understand that even if the Compliance Review Interpretations Committee says this is what the interpretation is, and a state is doing something that's not consistent with that, that does not override the state's law. The state's law is still going to control. What it may do if a state's not doing something consistent with the interpretation is it may lead to a potential compliance issue for the state. If the governing board approves an interpretation request like that and a state's doing something inconsistent, there is before it becomes a compliance issue, there is a provision in our agreement that says if that state would be required to change its law, they have a period of time to come back into compliance on that particular issue. If that period of time goes past and they aren't in compliance, then it can become what we would call a compliance issue for them. And the state could be sanctioned by the governing board for not being in compliance. So that's kind of the process kind of from start to finish. And there are times when our CRIC committee gets a request and it ultimately gets referred back to our state and local advisory council for, I'm going to say, additional detail work, looking at it not only from in the weeds, but also sometimes from underneath, looking all the way down into the roots of it. But then they will help develop that recommendation.
So it's another place that people can go to get reaffirmation or further review if they kind of run into a roadblock and they think it's against Streamline rules or interpretation, and then they can get that reviewed by Streamline and kind of another way to go to encourage the state to do something different or approach it differently, right?
Yeah, and again, I can't stress enough though that because we have had people try to say, well, Streamline says you need to do it like this, and if the state's not, that somehow it the state is stopped or us stopped from taking a particular position. And the state certainly can take a different position, but again, it can create a compliance issue. But what we say is not going to override their state law. Now, I'm happy that, I'm going to say probably 99.99% of the time, well, anything that we have put out that we're aware of, and that's part of our compliance review process, our states are following the requirements of the agreement. And they're doing, whether it's interpretations, definitions, listings, the states are following it, and that's what they need to be doing.
Yes. Awesome. Well, thank you for answering that, and I appreciate the question, and thank you. And we got to do a podcast next year. Set some time aside. Maybe like I know. Set some. We can spread it out through the whole year of publishing it.
Yeah, you exercise and you work out listening to music. I'm waiting for someone to say, "Hey, I worked out," and the podcast on Streamlined Sales Tax was what I was listening to the whole time. It just kept me moving.
I would say if they were doing a workout to this, it would probably be like boxing or something like that.
Very
get your frustration out. Yep. Well,
yes.
thank you, Craig.
Yeah, thank you for having me. I appreciate it, and we always we're at Streamline now. I've started to end all our conversations. It seems like now with just remember, just keep thinking positive and testing negative. Let's get through this.
Yes, very good. I like it. Awesome. Well, hopefully we have a amazing 2021. That's everyone I hear. That's what we're thinking. So let's do it.
Right.
All right. I will talk to you again soon, Craig, and thank you everyone for tuning in.
Thank you, Holly.
Thanks.